What are some of the common tricks that these trading gurus use to fool people? What do they do? One of the biggest concepts to understand is selection bias. Selection bias. You can get a picture of somebody or a video of somebody holding up MetaTrader 4 on their mobile phone, and they show you that they've won a whole load of trades. Yeah, selection bias. They're not showing you that they've lost a whole load of trades, because obviously that wouldn't sell their product, would it? So in these winning trades, one of the things they can do, they can split the trades and take 10 of the same trades. So if you're placing a normal trade where you might risk 1% to make a percent on whatever product it is you're trading, they could split that into 15 smaller trades that are the same trade, and obviously all 15 win or all 15 lose. Yeah, that's one of the things you can see that they do, because you think, or you might not think, it's like, oh, lots of blue, lots of winning trades. But if it's the same trade taken a dozen times or whatever, it's like, oh, he's clever, he's won 12 out of 12 trades. But it's the same trade. Another thing they do is very careful chart selection. Yeah. If a chart is trending, pretty much any strategy out there will be doing well. Any trending strategy will be doing well in a trending market. But typically the market only trends for maybe 20 or 30%. So they're very careful when they show you winning trades that it fits the chart. So they're fitting their strategy to a chart. Yeah. I mean, you could just do that with a couple of moving averages. Just enter and exit. Oh, look at all this money I made. Yeah. But what about all the times you didn't make money? That's the thing. That is the thing. Selection bias. Another thing is not just only choosing a particular chart and maybe showing you 8 out of 9 winners. By not understanding randomness and not understanding selection bias, you will be easily fooled. Easily fooled. If you were to flip a coin for buy or sell, it's not going to be win, lose, win, lose, win, lose, win, lose. If it's a 50-50, win or lose, 1 in 1,000 times, or 1 in 1,024 times, you're going to get 10 out of 10. Yeah? And 2 out of 1,024, you're going to win 9 out of 10. And then you see, just by selecting a winning streak, even from tossing a coin, it can deceive people. Yeah. So when you see these gurus show you 1 or 2 trades, or even half a dozen trades, it's utterly meaningless. Utterly meaningless. You could literally flip a coin and get 8 out of 10, if you wait long enough. So, another thing they deceive you with is winning percentage. Winning percentage. It means nothing outside of the context of risk to reward. Yeah? If you risk, 100 pips to win 10 pips, and you flip a coin, you're going to have a win percentage over time of about 90%. But because of spread and commission, you're not actually going to make any money. But hey, you've got a win percent of 90. There you go. And again, using selection bias on top of that, you could wait until you win 99%. Trading robots Another thing is they will just show you curve fitted results. The thing about historical data is you can create an algorithm that can fit that historical data. You could create an algorithm that wins 100%. It simply reads the historical data and does the trades already. You know, it already knows whether it's going to win or lose. And to make it more convincing, they might throw in a few losing trades. So you think, oh, I don't believe you could have a robot that wins 100% of the time, but maybe 90% of the time. So they just throw in a few losing trades to make it more believable. And do you think these people are making money from their trading robots or from trading? If you think about it, if somebody makes a curve fitting algorithm, calls it quantum AI, or whatever the latest trend is, and they put a price tag on it of $500, you're going to think, oh, it must be $500 worth of value. But if they sell half a dozen of them, they've basically gotten paid $6,000 just to create a curve fitting algorithm. Yeah. So, backtesting, is it any good? To a limited extent, yes. To a limited extent, backtesting is useful. But if you're going to backtest 100 times, it's meaningless. It's completely meaningless because of selection bias. When you look at, there's a YouTube channel, Serious Backtesting. They backtest them 10,000 times. Yeah. One of the things with these trading gurus, they like the daily charts because you can't do any meaningful backtesting. You know, you can test it a few hundred times maybe. Meaningless, utterly meaningless. Just because you've spent a lot of money on a course or a product doesn't mean it's any better than flipping a coin. It's quite funny. When I've tested a few of these gurus' strategies, you're actually better off flipping a coin. I've done a couple of videos on this channel already, just talking about different products and different people. Just because you spend thousands of pounds on it doesn't mean it's thousands of pounds of worth or value. A lot of these gurus, they make their money from courses. They don't make their money from trading. They have average results at best. But what amazes me is when you look at the broker statistics and you get, as I've mentioned on this channel before, 30% of people winning who are your average trader, and that when somebody spends thousands and thousands and thousands, even tens of thousands, on some fancy software that is tied into a particular broker, they have worse results, more than twice as bad results. 13% winning according to 30% winning. So you have to see that, well, obviously whatever the software these gurus are putting out there makes you lose money. And if they own the brokerage, it's a conflict of interest, isn't it? So, another thing is regulation. Some dodgy trader gurus out there, they will just copy or make up regulated numbers. Oh, we're regulated by SEC or FCA or whatever, and they put up some random number, right? And people don't even bother to check that they actually are regulated. Yeah, there's a statistic. 90% of new traders lose 90% of their money within 90 days. Yeah. It's no surprise, is it really? It's no surprise. A lot of them, they don't do any risk management. They don't have any strategy. And the strategies they use aren't proven. Just because somebody says they're proven doesn't mean they're proven. You know, ironically, you can look at the broker's results and you can see, well, what all this does is it proves that the clients lose money quicker than the average client out there. So there you go. But selection bias is one of the big things. Also, if somebody has trained tens of thousands of people, you know if it's, if it's a flip of a coin and you want 10 winners out of 10 winners and you've got 10,000 people, probability tells you that if you train 10,000 people, you're going to get 10 out of that 10,000 people who are going to win 10 times in a row simply because they flipped a coin. Because of randomness, 50-50. To win once, it's 50-50. To win twice, 25%. To win 3 times in a row, 12.5%, and so on, right? All you got to do is wait long enough and you'll get people who win 20 out of 20, right? They'll put them up as a client, oh, look at this client, they've won 15, 20%, or whatever. And it's just, that was somebody who was lucky. Yeah, flip of a coin, and they won 8 times out of 10. Yeah, it's very easy to win 8 times out of 10. It's very hard to win 80 times out of 100 or 800 times out of 1,000. That's where they deceive you, just showing you a handful of trades. Yeah, selection bias. They'll show you the results that make the product look good. So that's just some of the ways they deceive you. Just some of the ways they deceive you. They manipulate prices, they manipulate spreads, they stop people out, by manipulating a spread or delaying data. There's hundreds of tricks these dodgy brokers and dodgy gurus use to con you. Yeah? But if you want to put your money into something and you haven't tested it, why would you do that? A lot of these gurus, they want you to trade using real money, yeah, your money. But when they trade, they're trading on demo accounts that they've renamed as live accounts, or they've hedged the bets. If they place a buy, they also place a sell, so there's a net zero. But there's hundreds of tricks these trading gurus use, hundreds of tricks to deceive you. But I would say the biggest one is selection bias, showing you what you want to see, so you're then going to buy their system. Yeah. I'll tell you what, it's a mug's game. It's a mug's game.